Well, there's a couple of key themes. So one would be the margins, and to see basically what's happening on the funding side of things. So they have been seeing pressures coming through for the last couple of years, basically. Seeing where they're at with that now, has that all come through and started to abate now? And also what's happening on the asset side of things. So that's the repricing that they've been doing and how much that actually has benefited them and how much that will continue to benefit them in the future. So really just getting that dynamic about margins under control and understanding that better. I guess the other thing is capital. So that's been talked about for the last couple of years, and the regulators made it very clear by mid-year they will have actually come out with more information on what they're planning to do and where the banks need to get to, and basically we'll be able to finish that off this year ideally. So getting a bit more colour around what's happening there. You know, there might even be a left field risk that one of the banks does an underwritten DRP just to get ahead of the curve, maybe just a small amount there. We might see that, so that's the other thing to focus on as well. And apart from that, the banks have basically rallied hard, as we were saying at the start, and they are starting to look pretty expensive, but there's no real catalyst for them to fall just yet. Well, I think ANZ and NAB have actually the most opportunities on that front. NAB's probably done now. They've been exiting a lot of their businesses. They had the US, they're the UK, and they even had wealth, and they're pretty much out of all those things now. So that's all done and dusted, but that was, I guess, caused by their own failings in the past. ANZ, similar story. They've got quite a few positions in Asia, which they have been steadily getting out of. They've got a few more to go, but that is all upside when it comes to capital, but downside when it comes to earnings. And that's probably the part that's not as well understood as it needs to be, is that as you do get out of these businesses, there is an earnings hit you take, although you do get better capital, which means that you probably have to raise less capital depending on where APRA actually asks you to get to in the end. Well, that's actually a very interesting point to look at actually, because that's actually where we might see some upside surprise coming through for the banks. In ANZ in particular, that is one that's been hit quite hard by a lot of these bad debts coming through, and we might actually see them coming in well below what they've talked about in the past, and that is potential earnings upside for them. So all the banks basically, they had quite a few institutional one-offs come through in the start of last year. Now that's all abated, it hasn't continued, and it was basically a series of one-offs that came through. So that potentially now we do actually see a little bit of upside just in consensus forecasts when some of those bad debt charges do get reversed out. Well, probably wouldn't want to be long the banks at this point in time, just given that it is a tough environment. Fundamentally, there's not a whole lot going for them except for repricing, and a lot of that's already in the price, given they're trading about 14 to 15 times. It's pretty punchy and elevated valuations. So I wouldn't want to be long the banks at this point in time. I'm not saying necessarily you want to be short either, but just it is getting pretty toppy. Now, in terms of, I guess, the sector on an individual stock basis, ANZ is probably the best position going to its result. It is effectively a self-help turnaround story, and there are a lot of levers they can pull, and they have been pulling the right levers and doing a good job there. They are divesting quite a few of their Asian stakes and doing it quite fast, actually. So that does provide some capital upside to them. On a pro forma basis, they are actually better positioned than all their peers in terms of capital. So they do potentially have the, I guess, outcome where all the peers end up having to raise some capital and ANZ doesn't actually have to raise much, or may even potentially be able to do a buyback or some sort of capital return after all the capital things are done and dusted. So ANZ is probably the one you want to be in at this point in time if you had to be in one of them. I guess on the other side of the spectrum, CBA and Westpac are both mortgage-focused banks. If there is any jitter in the mortgage market, then they are obviously the most exposed. Having said that, they are all exposed. And then you've got NAB, which has been struggling with revenue growth in the past. It sounds like things have changed in the business bank, and that could actually lead to a bit of upside surprise on the margins. But the rest of the whole sector is pretty challenged at this point in time.